low-key no idea what I'm doing. So hopefully this works. And yeah, I did get a new computer though. It's pretty sick. But yeah, for prop firms, um, if you want to catch these like larger moves, like like these thousand tick trades, you can only do that on like Top Step or any firm that doesn't have a consistency rule. But if you're like Apex, you have to be really consistent with your sizings, how much you make per trade. It's stupid, because the consistency rule is going to cap that. You can only make a certain amount, relative to your account balance and all this stuff. So if you are trading with Apex, I would go with base hits. So try to be consistent with it to where ideally you want to trade lower RR because of the rules. Yeah, you have to be consistent with your sizings, your yeah, you know, however much you're making. So really, you know, if you have like 2R, like a 2R system, you just want to be TPing there, and you want to be managing aggressively, a lot more aggressive compared to like Top Step, and stuff like that. But yeah, MMFU expert accounts, there's no uh, there's no consistency rule, so it's really dope. So it really depends on what trader you are. Like you can make Apex work for sure, but you have to go for like lower RR. Uh, do you ever pyramid? No, I don't pyramid. If I was to trade a purse account, yeah, I would. But like, there's really no like I'm entering with like let's say Top Step for example. You're only maxed to 5 contracts per account. So if I enter on minis on a 50K account, a lot of times, especially with the volatility, the the risk is crazy. It's like $500 to $1,000 for one mini. Now, if you're using micros, I mean, generally, I like to risk if I'm on Top Step and I'm over the buffer or something. I like to risk around that much. I'm a lot different from a lot of traders where I will risk a lot, if there's no limitations. If I have a buffer, I will risk like 1% to 2%, which a lot of people will not do. So really, like, I can't even do that because I'm already risking so much. You know. Now, if I get in with micros, let's say it's like 4 micros, I can only scale in one because I'm maxed to 5. And if I'm entering minis, it's already a lot of risk to begin with, so it's kind of hard to do that. What do you think about doing a backtest? I have 2 backtest sessions done, um, recorded. I don't know if you've seen them. How were you able to build up such knowledge around how you trade? Dude, a lot of chart time, man. So like I got introduced to ICT about a little bit over 2 years ago, and I never took a course on ICT. Like I never took anyone's course or anything like that. Maybe the MXM Traders course, that's it. But that kind of highlights some kind of like basic things in a sense, but it's really good. It highlights a models like framework, so like internal, to external, like stuff like this, and it highlights the phases of price within this, the distribution leg and stuff like that. I learned like stuff like that, but even this, you have to have a lot of narrative behind it and stuff like that. But yeah, I learned from like T Trades videos. That's really what how I started. I actually came across T Trades videos. They were really simple, so I started learning from him, and then AM Trades and the MXM Trader. Never watched ICT, but yeah, it's a bunch of chart time, dude. Like tons of back testing. I'm telling you, that's how you're gonna get better. It's not from a course. You're gonna learn a lot of things from the course, but you still need to go implement those things. Um, that's how you're gonna learn the best. Like chart time, dude. I'm telling you, you're gonna learn so much things through your own back testing and whatnot. Uh, any advice on how someone can? Yeah, man, it's just you gotta put in a lot of time into this. Like truly. Got a question. Are session highs and lows relevant? Kilo. Oh, for sure. So that's something I'm gonna cover next stream. It's essentially when, let's say the previous day, right? Let's say this is the previous day's range here, okay? And let's say it prints a fair value gap. So let's mark out the EQ of the previous day's range. you want this next candle's low to form in the upper half of this candle's range, right? So this is when you have an invalidation point, right? Let's say the previous day's range, and the previous sessions trade into that, but they don't reverse. Let's say they consolidate or something. Then this session low now becomes your invalidation point. It's no longer this fair value gap because price didn't reverse from this fair value gap. It's essentially this low, right? If you look at the space between these lows, and this is how it's going to be a lot of times, right? When you come into the sessions and there's no relevant higher low of the day put in, the session highs and lows are like reversal points, right? To actually create the high and low of the day, because if price doesn't manipulate this low, a lot of times there's nothing else beyond that level. And a lot of times when we're, New York traders specifically, we come to the charts at key times in the day where ideally the price reverses at that time if there is no high and low of the day. If it doesn't reverse at that time, then we don't really expect some relevant time to reverse the day. So if let's say this is 9:30 or something, you come to the charts and there is no established higher low of the day, then ideally you want to pair a key time or a driver with the manipulation of this low, and that will create the low of the day more times than not, right? This happens, you're going to see this a lot with session highs and lows. Session highs and lows are very important. But again, like my next stream or whenever I get these slides done, it's going to showcase like a mechanical process to framing, profiles really, like high and lows a day. You can get pretty mechanical with it. What you find the best to go for, prop and strat. I like a prop firm that doesn't limit my basically consistency. Like that consistency rule is I don't like to have that because it limits my trading a lot. It's a TP early and whatnot. I really don't care about a prop for limiting the amount to pay out. So MFU, there really is no, on the expert account, I don't believe there's no limit. Now on Topps there is, it's 5K per account, but that's still fine. I don't really care about that, to be honest. But yeah, it's really just whatever, with Apex, you can get 20 accounts. That's the good thing about it. They're cheap and there's 20 accounts, but the rules are the worst. So it's like a give and take. It's like whatever type of trader you are, can cater to different firms. So if you're a scalper, Apex is perfect for you. But I am really not a scalper, so I really have to adjust my style when I trade Apex, which I just started trading Apex. I have 5 accounts with them. Yeah, I've been trading Topps for some time now. And MFU is nice too. Yeah, exactly. MFU starter or the expert accounts, really sick. But yeah, I would focus on Top Step and MFU. I'd say the best firms. Take Profit Trader. I never checked them out. Black screen. Is it still good? Is my screen good? Oh shit. Black screen. Oh no. Oh, now it's good? Has it been good for a while? Works on oh, what the heck? Oh no. Oh no. Make selection. Share all. Okay, what about now? That's so bad. What about now? Can y'all see this? No charts? What the heck? Huh. Ay, ay, ay. What the hell, man? Share entire screen. What about now? Okay. God dang it. Let me go over that one example earlier. Y'all were just seeing a black screen. That's funny. Or the Discord screen. Whoops. So what was I talking about? Oh, about session highs and lows. This is really the only thing I talked about on the charts. So it's specific when the previous day, let's say, prints a range where you mark out the EQ of this candle's range or whatever, and you want to see the next day continue. And I was saying that not every day, but when you do have a clear invalidation point, let's say within that previous candle's range, with the upper half of that, you have like a fair value gap, let's say. Well, let's say the sessions trade into it and they don't reverse. They create session, a session low or something, or an hourly swing point in the form of session, session lows. Then this becomes a key reversal point for the day. Because if you don't reverse here, then there's really nothing else to trade into, right? If we come all the way down here, what are we doing? Disrespecting the EQ of this range, right? So a lot of times when you come to sessions and you see that there's no high of day, low of day put in, you can mechanically define your reversal point, which would be this low. Now, what if you come to session and price does put in a reversal at this point? Now, this is specific if you're a New York trader. Ideally, there's going to be some CSD or some fair value gap that price created when it traded away from this key level. So let me actually go to this example, because I can refer to one pretty easily here. This is what I go over in my T-Talk video. So we'll go here. Okay, so if I go to the daily chart here, this is really what we're going to go over next stream, how to mechanically define this stuff. But so when you first come into this day, you have one invalidation point, and that's really the EQ of this range, right? Now we can begin to maybe filter it down, looking within this candle to see if there's any key level. So let's go to the 4-hour first. Okay, well, we have a fair value gap. So we could say that, potentially we don't want to see this reverse, right? And what about on the 1-hour? Okay, we have some swing lows, like a consolidation low. So really we have a couple of areas where price could reverse from. Now, what you're going to see here is the daily candle opens low first. That's how we want to see bullish candles form, right? We also want a small wick. These are candle profiles, right? For a bullish candle, we want to open low, but also create a small opposing run, right? So that's already supporting bullishness at this point, but it's just Asia session. So when you see price trade into this level, but we're not reversing, you see how we're just creating a swing low. Now this swing low becomes your new invalidation point, because if you don't manipulate this, then there's nothing else to manipulate beyond that, right? This is a relevant swing, right? This swing low, the space between this low and these lows is significant, right? And these lows are positioned way below EQ of this candle's range. So really, this becomes your new invalidation point, right? So price, you would already assume, if you're a London trader, this is your manipulation, right, to form low of day ideally. So when you see this form with the SMT, that's perfect, right? And yeah, so when we actually confirm, so when you come into the New York session and you see this, you see price has actually formed a CSD. Well, first, if you're like a London trader or whatnot, now this becomes your invalidation point, right? So first you want to see this get manipulated. Once it gets manipulated and price forms opposing candles that confirm it, and then this becomes your new invalidation point. It moves from the EQ of this candle's range now to this low, or the 0.5 of these opposing candles, really, right? But once price really starts to trade away and creates a fair value gap, now this becomes your new invalidation point, because we talked about this last stream. Phases of price on our way to relevant draws on liquidity. Would we not want to see deep retracements? We don't want to see this deep retracement if we haven't even yet expanded yet to anything irrelevant. So really, it's this fair value gap now that becomes your new invalidation point, not really this opposing candle, right? We don't want to see this get traded back into. So when we run through the if-then scenarios, if we have an assumed low of day prior to a driver, then what should the driver do? It should expand away, right? So this 8 o'clock candle is 8:30 red folder news, and that's what you see here. Price makes an opposing run to the draw, which is higher. We get a close through right here. Pair that with a manipulation or an SMT here as well. And yeah, right, that forms the low of 8 o'clock 1-hour candle. Right, does that make sense, everyone? Yep, so all we're doing is just aligning expansion candles, right? You see the daily supports expansion. The 4-hour candle that we're trading within supports expansion. We have a London 2 a.m. reversal, 6 a.m. New York continuation. We're pairing our drivers with continuation. And remember, drivers confirm narrative when they actually expand away from the low of the day. That confirms this as the low of the day. Now, what do we also notice about price prior to this driver? The daily candle has yet to actually expand, right? We're still within the wick of the candle. So when would we actually create the body? Around these relevant times, or around these drivers, which is what we see, right? And would we frame a reversal off of this high? No, right? Because it's a failure swing to this high, right? This doesn't make sense to reverse off this high, right? When we think about the daily narrative, right? We have a swing point in the daily time frame. We're expecting this day to expand towards daily objectives, right? When you think about models, it's just a daily range low expansion to the range high, right? So order pairing ranges. We talked about the models, right, earlier. What do we see in the daily time frame or the 1 hour time frame that actually forms a low of day? It's an hourly model forming low of day, right? It's again order pairing ranges, GXT ideal profile, where the low of the day is formed from a swing point, which here is a range low, and we distribute to the range high, and we're obviously looking for price to expand past this to get to this objective. So when we reach into this high here, what do we want to see, right? We want to see continuation signatures to continue higher, right? And that's what we see here. We see a retracement and 930 expand away, right? Once we reach into objectives, we can then, make some sort of retracement, right? Now, I don't use EQ like this, but as you see, we are likely to get some sort of deeper retracement in a sense after we actually reach an objective, and we just want a closure through opposing candles, right? So this is what I took on YM. I took 930 in YM if I show you here. And this is where we see that that strength switch. So you saw prior to 930 on NQ and ES, we actually took out this high, right? What do we see here, right? How do you know this is not a fake SMT? When this asset switches to the stronger asset. Now look here. Look at the strength switch, right? Look at the shallow run, the shallow retracement on YM compared to NQ, a much deeper retracement, right? And that's after we take out this high. So do you see the strength switch here? Then we create a bullish SMT here. So you can already anticipate 930 to expand off these opposing candles. This is a positional entry, like a driver positional entry, right? And you can already assume that the low of the candle is put in, right? This is the fractal model, right? You have a candle 2. This next candle 3 opens low first, which is always ideal. We close through it. The opposing candles that created the opposing run, that is the intracandle CST once that's closed over. That confirms the low of candle 3. So if this is, we expect this to be protected with the SMT that forms prior to 930, the 930 should just expand, right? It's the same thing. Prior to this 930 driver, the daily candle hasn't even expanded. So when would we expand? It would be around these, relevant times. So sorry about that black screen. That's funny. But let me scroll up. That kind of happens when I scroll up and like reading stuff, and then you guys tell me down, like I just can't see it. Where are we at here? Can you go over two-stage SMT or any tips for SMTs in general, not just heart? Okay, so there's a couple of forms of SMT. I'm not going to go over all of them. There's a couple forms of like two-stage SMT. So two-stage SMT is essentially when you have a large range SMT, so maybe like this, and then a lower time frame you have a small range SMT, and ideally it forms something like this, where we actually, we actually saw that this week, I think, which is this day here. So essentially, it's when an asset puts in a higher high, let's say, which forms an SMT, and then we put in a lower low. Why is it so weird? I don't know why the drawings are so... Let me go on the hourly time frame maybe? Let's see. Yeah, so let's say this asset puts in a higher high, and then after we engage with this high, the stronger asset switches to the weaker asset, because this is what you want to see, right? If this asset is going to be a true manipulation, then this asset needs to also expand away. We know the weaker asset is going to expand away because it's weaker, right? It showed us weakness here. But the stronger asset needs to show weakness, and that can be visibly shown through a couple of different ways. It doesn't have to be SMT at the high. It can be a couple different ways. It can look like this, where this asset displacement is just stronger than this asset here. So maybe it's going to look something like this, where this asset creates a fair value gap. Maybe this asset doesn't. So you see the strength switch there via just displacement or fair value gaps. It'll go like many different ways. It can look like this, where maybe this asset starts consolidating and this asset is just ripping lower, right? Or something. So I'm going to show you a couple examples. There's many examples, like this is a whole dedicated stream, but let's go over like to this example here, to where this day, when I look at this here, what do we see? We see this bullish SMT, bullish SMT. How do you know this is fake, right? Because when I look at silver, have a very large displacement. We're actually closing near the low, but over here, we're actually creating a candle too, from a fair value gap with a bullish SMT. So how do you know this is fake, right? Well, one, we still have downside movement to draw into on the weaker asset. So if the weaker asset still has something to draw into, then that is a potential that the weaker asset could continue right lower. And we also have an SMT at the external range high as well. So we have SMT on both sides. So how do you know which one's real? So this is the SMT here, by the way. It's previous week high. So here, right? When I look at this asset over here as well, we also failed. So first off, it's the same thing, but you can see the strength here. You see this asset puts in a bullish candle. The other assets, or this asset puts in a bearish candle. Right, we sweep out the previous week's high. I drew that wrong, but you can already see that these two assets already started to, take off while this asset's lagging behind. But how do we know it's lagging behind? Well, phase the price. So if this is going to be the strongest asset, then what do we want to see, right? An expansion mouth expansion, right? Some sort of reversal signature, but what do we see? The stronger asset is actually consolidating after expansion. Do you see this? Expansion, consolidation. So that's how you actually know that this asset is going to continue, because the strongest asset is actually just consolidating, right? And here, how do we want to ideally leave a consolidation? Ideally, you manipulate this high, which is what we do prior to NFP. So if you manipulate prior to a news event, again, what do we expect? We expect the driver to expand away, right, if we've already manipulated. And here we have an SMT as well. But you're going to see the strength switch when price engaged with this high into this low. So look here. In the distribution leg, this asset switches to it goes from the strongest asset to more so the weakest asset, because when you look at the distribution leg over here on silver, you're seeing much more deeper retracements, right? So look at the point where we're consolidating within the 8 o'clock candle. Look over here. Look at this 8 o'clock candle. It's an expansion candle. So see the difference? Wow, price switches strength after we engage with this high. That shows you that gold is actually just lagging behind silver in a sense. So silver is slowing down so that gold can catch up to it in a sense. Right? Does that make sense? Like intraday. So also the stronger asset puts in a reversal signature when we engage with the high. And again, we want to see weakness. We want to see this actually be a manipulation, right? Because SMT is like a filter for stop hunts, right? But price, what do you call it? Like phase the price is another filter for like actually engaging with key levels, right? Because if you don't have you might have an SMT here, but if you don't have a reversal signature here, then obviously that's a fake manipulation. If it's going to consolidate or something, probably going to continue, right? The SMT will break. So you really need both, right? SMT is a filter for the stop hunt, and what do you call it? Phase the price is a filter to actually confirm it. So I hope, does that example make sense here? Also, what can I refer to as well? I had another example in mind. Totally forgot. Totally forgot. I just showed you one on YM and NQ. I'm just trying to remember one here. Damn, I can't remember one. Here. It's got to be on indices somewhere. Oh, yeah. Oh, yeah, man. So look here. So that I shorted this day, right? So why did I short this day? So if you just go to the weekly chart, if we're going to continue lower, right, we're going to continue from some key level within this candle's range here. So when I look here, we have a fair value gap potentially, right, where the weekly is kind of just opening high first in a sense. And it's leaving behind these failure swings, which I thought we were going to trade back into, to be honest. I thought we were going to trade back to these, but we did it. But again, just with the idea, I can trade back to these lows potentially. And you see that the previous day actually engaged with this key level, but it didn't reverse. So this is when we anticipate what? A candle to a reversal into expansion, right? As long as it has that small wick, we could trade that, right? So, okay. So we want to see a small opposing run, sweeping this high out, forming a small wick so it can reverse into expansion, right? So that's what we see. And what we see here is NQ being the stronger asset because it takes out this little high here. Now, this is not really the most relevant SMT in the world, but it's the fact that the asset switch strength, which is what is actually important. So what you're seeing here is that two-stage SMT, right? You have this asset showing strength, and then it's switching to the weaker asset here, which gives us insight that price could either retrace into this candle's range or be the catalyst for reversal to get to these lows essentially. So this day was more like a retracement day. That's why y'all saw me target EQ of this expansion leg. So essentially just external to internal of the previous day's range. And how do you actually know that it's going to expand away? Because a lot of people were looking bullish this day because they saw price open low first, which is valid, right? That's potential, right? But again, what do we need to be trading? We need to be trading away from some key level, right? So I think there's like, what was it, CPI? Yeah, CPI this day. So what do we see prior to CPI? Well, we see that we have a potential reversal, right? What are we doing after we engage with this high? We're expanding away. I'll also trade this on NQ, so let's go to NQ real quick. So after we create this SMT here, what are we seeing? We're expanding away. That's good. Anytime you see an SMT, it's a manipulation, so you want to see expansion away, or some sort of, your fair value gap or whatever, right? So prior to the driver, what are we kind of within here? We're within an expansion leg, right? So we have this hourly expansion leg internally to the daily candle. So if we're going to continue lower, then what needs to hold, right? It's really this fair value gap. But what do we see? Price doesn't reverse from this fair value gap, right? We initially form a candle 2, right? But if there's going to be a true reversal from this fair value gap, then what would happen? Candle 3, candle 4. And you see expand away. But the fact that it doesn't, it consolidates. Now it just shows you that we're really just within a bigger consolidation between this low and this high. So if I'm bullish, what is the if-then scenario we set, right? Prior to a driver, if there's no low of day established, because there is no low of day here, right? Because we didn't really trade. Maybe you trade into this lower or whatnot, but we didn't expand away from it, right? If you look here, it's just a bunch of low resistance. We don't trade away from that. I don't even know if there's any, CSD either. Maybe this 15-minute CSD or whatever. But again, I don't really do that. Here, I don't see, some relevant level to trade it from. So ideally, this is the F-then scenario you set if you're bullish. It's simply, we don't have an established low of day set, so the driver needs to come create it. So ideally, you have 8:30 manipulate, and then 9:30 expand. That's ideal, right? But if you want to continue bearish, which after expansion and we consolidate, we expect continuation as well, right? So that's another reason why this low pretty much has to get revisited. So if you want to trade to it, ideally you manipulate the high first and then trade to this low, right? And then obviously potentially beyond it, because there's nothing beyond this. If you don't manipulate this low, nothing's stopping it, right? We don't really think about fair value gaps in that sense. I'm kind of like AM, where like fair value gaps is not really what I am kind of framing my trades around in a sense. It's really fair value gaps that form after manipulation, right? So you see this manipulation that's high and these fair value gaps. Like this is what I want price to support expansion away from this fair value gap. So like hourly opposing candles, hourly fair value gaps away from some sort of manipulation. Here it's just an expansion leg. You guys know me, how to trade away from a retracement. If this is going to be a true retracement, then what do I need to be trading away from? Manipulation. So really, I'm trading away from highs and lows all the time, just like AM kind of. So if I want to trade to this low, then we need to be trading away from something relevant. We don't want to be trading away from failure swings, right? These are failure swings. So we need to manipulate this range high to get this low. So what do we see? Pretty simple. We see an SMT form here with YM, right? So what does that show us, right? If 830 manipulates, then what should 930 do? It should expand into these lows. So when I drop lower, you're gonna see the strength switch again. So we saw it on the daily. Now we're gonna see it on the hourly. And another thing I want to mention here is our invalidation point kind of moves. Like I said, you're trading away from this, high here, the high of day. But when you're really far away from the high of day and you want to trade continuation away from the high of day, you need to kind of be trading away from some relevant level that price is actually close to. Does that make sense? So here we have an internal manipulation. You have to view this as manipulation away from the high of day. So within the expansion leg, you have some internal manipulation that's more local, right? The price can continue away from. Does that make sense? So you're going to see the same thing here on the 5 minutes. So here's the SMT that we see. We see that NQ and ES are weaker than YM in a sense because they create lower lows. Now this becomes your new invalidation point where we see we paired this manipulation with 830. So what do we want 930 to do? Expand away. We have a candle 2 closure, so now it's just about trading the fractal model rate mechanically. So what do we put in here? Again, we have a key level. We put in a swing point from the key level, but did we reverse from it? No. Why? Because we didn't close below here. So now this swing point high that is pretty much created from or inside of the key level becomes the reversal point. Just like if a swing point gets created in a fair value gap but doesn't reverse, the swing point becomes the invalidation point, right? Because if you don't manipulate that, then you're just creating lower lows instead of a key level. If you don't manipulate this high, you're creating higher highs instead of a key level or consolidation. It's not ideal, right? So this needs to be manipulated, and what you're going to see here is very interesting. Price puts in a higher high here on NQ and ES, but a lower low on YM. So now what are you seeing? The strength switch, right? Again, assets are always switching from stronger to weaker, so they actually become correlated, right? If they didn't do that, if they didn't actually switch strengths constantly, then that's how they actually catch up, right? But if they didn't do that, then one asset would always be stronger than the other, and there would be no correlation, if that makes sense. So that's what we're seeing here. Right, higher high, lower low within the distribution leg. So now, once you close below this low, and actually validate this as a high of candle 3, now this becomes your new invalidation point. It's no longer this high, right? It gets moved to this high. Just like this high gets moved to this high. It's the same thing, right? From the daily to the hourly, now we're going from really the hourly to like the 5 minute within the distribution leg away from the hourly, right? Does that make sense? So what is 930 opening up near? These opposing candles, right? We have an internal manipulation where we haven't yet traded into anything relevant. You see that? So this is when you take positional entries, right? When there's a draw on liquidity, there's a clear invalidation points. You're already within a fractal model, which forms the high of, 6 a.m. So this is what we're trading right here, and this could be your trade. Now I took this on a couple of accounts. So on Apex, I took this trade like this, and I obviously want lower RR. So I'm TPing, or I'm taking partials here, and I'm going break even, so it takes me out here. But on Top Step, I took this position, right? And I originally was going to hold it, right? Because I can hold for these longer, objectives. And what I'm seeing here is 930 and 830 are really in distribution away from this high. And when you think about a bullish day, you really want the drivers to reverse the day. So I knew that the drivers really can't reverse this day in a sense. So if I see an opposing candle get created after we, hit this objective here, then I know that we're probably going to continue. And another interesting thing here, right, is look at the time. This is why I held on to this position. Look at the time that we actually traded into this low on ES. It's much sooner than we do on NQ, right? And there's really no way I can actually tell that this is going to happen, so I kind of get stuck in on NQ, the lagging asset here. I really can't tell, how to actually gauge that, because there's this small detail where you see this high is a little bit farther away from these bodies. When I look at ES, we're damn near at these highs. So a little bit closer. So I'm actually thinking that this asset is potentially weaker, to be honest, in Q, I thought, but that's not the case. And maybe I'm just kind of overanalyzing. But anyways, we see that NQ or ES takes out this low prior to NQ. So we already know that ES is weaker. But what you're going to see is this. We see the strength kind of switch back again. So we're seeing that NQ is, trying to essentially manipulate this low, or just getting some sort of retracement after we hit this low. And we're creating a lower low here, right? Where ES, we're creating a higher high, right? So in this already, we kind of already failed to manipulate this low. We already traded into it. We already, went higher and then closed below here, etc. It's kind of just really just a retracement on the 5-minute or whatnot. But you see that strength switch. So now I'm really not thinking that this is going to be a manipulation of this low. And like I said, if you're not going to manipulate this low, there's really not much stopping it, right? It makes sense to retrace after this huge range, like 10,000 points or something crazy. So I can just target EQ, right, of this daily range. I have a huge imbalance as well. So yeah, it just makes sense, right? You have SMT at the high of the day. The drivers are expanding away. So I'm really leaning towards this objective. And that's what we hit, right? So that was that day. That was CPI. Okay, I'm pretty much going to scroll past all these like black screen because that was actually funny. What if I did the whole stream like that? That'd be insane. Alright, so where did y'all see? Okay, so this is when y'all saying the screen is good. Alright. I got a payout this week on Take Profit 60. Oh, hell yeah. Let's go, man. First payout? Let's go. Oh, yeah, I know I need an extra monitor, Loki. How do you approach trading multiple assets if you would just be starting profit? Oh, yeah. So if I was a new trader, I'd probably just focus on one asset, because really that's all you really need. You only need one asset, but with experience, like I'm only trading guys on one monitor at one screen at a time. I don't have like 5 screens pulled up. I actually hate that. I know exactly where reversals should occur. I can just set limits there. And we also, with the GXT, when and how to kind of filter price mechanically. So what I mean by that is if we trade into a level, and let's say the the candle doesn't support expansion, then I know that I should be waiting for 10 o'clock, let's say. Let's say the 6 o'clock candle doesn't support expansion. Then I simply just wait for, 10 o'clock. So that's already pretty easy. I can be like, okay, on gold, I just wait for 10 o'clock. Now I go to indices, does support expansion? Maybe it does, but maybe there's no high of day, low of day. I'll set a limit there. So it's pretty easy, right? We're waiting for hourly closes, 4-hour closes, 30-minute closes. So it's really not that difficult, to be honest. Especially when you understand framework and how to actually frame trades and validations, etc. Like it just with experience, it becomes a lot easier, you know. That's really all I can say. A lot of people ask me that, like, how do you watch so many trades? But I don't know. It's just experience, dude. But also, like, my approach just makes it easier, I guess. Any filters for 4-hour profiling? Is there a stream for that? What do you mean by filters exactly? Oh, like avoiding low probability conditions in a sense? That's what kind of we're going to be going over next stream. Is like invalidations to a daily profile. How to actually confirm a daily profile, etc. Like stuff like that. Which, like I said, I had to do a T-Talks. So I had to create slides for that. So that took up a lot of time that I was going to use to create these slides. But yeah, we'll get into that, guys. How do you know if it is high and low day? Is that some sweep or CSD? Yeah, so like relevant levels. So, and again, there's only going to be like a couple of points for price to reverse from within the daily range. So if you go to a day like, let's just go to this day. When I just go here, like, this here, the 4-hour chart, you're gonna see that, here, if I just go to this day, right, there's not much I can really use. I don't think there's SMT at this low. Maybe there is. Okay, there is SMT at this low. So it's SMT at this low. It's like, where's your invalidation? It's pretty simple, right? Your invalidation for bullishness would be this, right? It'd be this CST. Like, you don't want to get this disrespected. But this is a very bearish market, and really, I actually shorted this day, and you're going to see. So you see how price, expands away from that. But if we're going to be bearish, right, where would we be bearish from? It's only one level. That's obviously the previous high, because when you look to the left, there's nothing else to reverse from. The highs are very far away, right? This is when I short YM because we create a lower low with the previous high, right? And if I open the day here, where is the only level for price to reverse from? It's really this swing point high, right? You can already anticipate an SMT forming here because of the strength difference. Look at the close here on the daily candle. It's very bearish. Look at the close over here. It's a reversal candle, so you can already gauge strength with that. So this fair value gap on the daily time frame, we can already anticipate NQ to trade into, which would create an SMT with YM, which is exactly what happens. So here, when I come into the day at like 8 a.m., which is this next candle, which is CPI, it's like there's no low of the day, as you see. See, there's no low of the day here. So if there's no low of the day, and we have highs to manipulate, and we form an SMT at that high, then I can assume that that this is the high of day, right? We can pair a manipulation with a driver. So if 8 o'clock manipulates, then what will 9:30 do? It will expand. So this is what I traded, right? So the first hour of the 9 o'clock candle creates opposing candle. It confirms that on the 30-minute time frame, which is not something that I need. But as you see, like coming today, this is the only level to reverse from, right? So it's really about gauging relevant highs and lows, which is really only going to form from the previous day or the current day's range. So maybe a reversal off of session highs and lows. That's really it. So when I go here, right, we are opening up 9:30 within this opposing candle, but if I drop lower, it's within this propulsion block. So this is what I took. It's posted on my Twitter here. right? So you can assume that the high of 6 a.m. candle is put in, the high of day is put in. We haven't yet expanded prior to 9:30. So again, ask yourself, has a high of day, low of day been put in prior to a driver? Well, it's like even if there is no CSD here, I would still, I'm talking about the 30-minute CSD, by the way. I would still validate this as a high of day, candidate potentially, right? Because there's nothing else to trade away from, right? It's really this SMT and candle close or whatnot, like failure to manipulate at this level. It's not so much this. I don't use CSDs on the 30-minute, 15-minute, or hourly to confirm intraday profiles, especially in New York session, because price is so fast. It moves so quickly. Um, More so like to confirm high and low day, if it's like London reversal or Asia, a lot of time has passed, right, when you come to New York session. So you're just going to have a CSD regardless, and that becomes your invalidation point. But a lot of times, this will just expand without a CSD, but here we do have a CSD. But I just confirmed the high and low of day from 1 hour or 30-minute candle closes. Within that candles, you're gonna have 5-minute CSDs and continuation signatures away from that reversal point, right? And those continuation signatures confirm the high of the candle threes, candle fours that we trade, right? So here, 8:30 manipulation, 9:30 is opening up within these opposing candles, which we can expect to trade away from. Another thing to notice here, if I go to the hourly time frame, what do we see about this daily range, right? We see that the daily hasn't actually expanded yet, right? So if we haven't expanded away from this manipulation, then what should 9:30 do? It should just expand, right? Because after manipulation, we expand. So this is why I'm expecting a one-sided movement at 9:30. Because if we didn't expand, then we shouldn't consolidate, right? We shouldn't retrace. If you manipulate, when you haven't expanded, then the only thing to do is to expand. So that's why you see this violent move. And, what happens prior to a driver will tell you a lot about what to expect. And this is what we're targeting, right? If you notice this daily candle has a very large wick, so we adjust our targets. It doesn't mean we can't trade it. It just means that it's not going to support a bullish or a bearish daily expansion candle. So that means you have to adjust your targets to maybe this low, which is what I targeted. It's just around that daily open, right? If that makes sense. So yeah, it's really your ability to identify relevant reversal points. That's really it. That's the biggest part. But for me, it's a bit different than AM trades where he requires a 15-minute, 30-minute, hourly CSD. I don't require that. Is there a mechanical way to determine the space between highs and lows? Not really. There's a mechanical way to identify, the wick size of candles, and that's by measuring the 0.5 of the previous candle's ranges. That's the mechanical way to do it. But as far as space, it's more of like an experience thing. You're gonna pick up on it easy. But this is how we mechanically define wick size, right? We mark out the EQ of ranges. Now this is something that I don't even really do. And it's not because it's not good or anything. It's just because this is really the only scenario where I wouldn't do it is if when a candle kind of closes like this, it kind of closes within its own range, where if I go back to over here, you're going to see that exactly what I'm talking about. Like this scenario, like you can't measure anything here. Why? Because it's closing within its own range. Even if it closed like right down here, it's closing near the EQ of its own range. So, this next candle is going to hit this 0.5 majority of the time, and that doesn't invalidate the idea, right? So that's just another thing with measuring EQ of ranges. It's not something we do with every single candle. If it forms like this, then you can't do it. All you have to do is require a small wick, right? So this is a small wick, right? Which you can visit. It's just you can like visibly identify it with experience, right? As well as like spaced out highs and lows. That's something you're gonna get down, if that makes sense. But relevant highs and lows when you're forming a high and low of day is going to be around the daily open, right? Because that forces a small wick. Does that make sense? So this is exactly what we see here. This is mechanically defined as a relevant high because it's within the previous day's range. Here's the daily open. You see how price is opening near it? Does that make sense? But again, that's stuff we're going to get into like next stream probably. What makes a protected swing? Can you please how to confirm you're trading away from it? Yeah, so it's going to be candle closes away from a relevant swing. Right? A relevant swing, once it gets manipulated, becomes a protected swing. How do we confirm that? Is when we get candle closes like this, like a fractal model, away from that reversal point, which gets confirmed, right? The swing point in the hourly gets confirmed by opposing candles on the lower time frame, which is just a fractal model, right? Which is what I traded here. This is my entry right here. It's on my Twitter. I also have a recap on that. Can you refer to yeah, I actually did trade that. I'll show you why. I took a break even. I let a lot of profit go, but if I go here, this is not really a day I'm expecting to be bullish. You see my limit orders here. So look here. The previous day has this kind of like reversal, and we have SMT at the previous high, which is always significant, right? So we have that. So I'm really anticipating the previous low to get traded into, right? And if we look at the way this daily candle forms, it opens low first, but it doesn't trade into anything relevant, as you see. So really, I'm viewing this SMT that gets put in here. So I'm going to show you. Y'all see this S&P at the high? I'm viewing that as a potential high of the day to get to all these lows. That's my thought process here. I'm assuming the wick is put in. Now, what do I actually trade here? I don't remember. I think it's a 30-minute model or some shit. Like later on. Hold on. Yeah, it's like right here or something. Maybe it's the hourly. Hold on. I don't even remember. Yeah, it's this next candle, right? It's this one right here. So I'm trading the 9 o'clock candle, I do believe. So I'm anticipating this to be more of like an internal manipulation to continue lower. But like an RB, same thing. We even have like a 2-stage SMT. Like I'm thinking this is great. We have it go from lower low to the stronger. So this is looking great to me. So I think this is a one-side narrative. So I actually set a limit here on right here. I actually think I set a limit there. Like a positional entry, essentially. I put my stop loss like somewhere like that or something. And then I was targeting like, I wanted all these lows, bro. Like I wanted this and even like maybe down here, bro. I thought this had a really good potential, but you're going to see it makes a pretty decent move, potentially. Right? It goes 3R. Like I said, I let 3R go to all the way to my break even, but I can't really trail anywhere, as you see. I could only take partials, which I really want to take partial here because these are all failure swings. So I'm not anticipating price to reverse from here because it's a failure swing to this low. Right? So that's why I take a break even there. Would I take it again? Yeah, I would take it again. I think it's a pretty good trade. We look here as well. We have a potential 2 a.m. reversal. We see this fair value gap is printed within the previous candle's range, which I assume to be the high of the day. Does that make sense? And I'm also viewing this as a consolidation, in a sense, almost. So really, I like the framework. Does it always work? No, obviously not. So as soon as we fail to do this, as soon as we fail to really trade away from that, that's a red flag in itself. It should have expanded here. So when it doesn't do that, you just let the day go, really. And that's kind of what you see. I wouldn't even buy this either. It doesn't really make sense to me. It's just a failure swing, right? We don't frame reversal failure swings generally. So it's just not really that interesting. Does that make sense? But really, it just ended up, this bullish range just ended up holding pretty much. Now, if we did manipulate some like this low, I would have traded it higher. but we didn't do that. So how do you manage entering calculating that? Oh, it's really easy. So for futures, it's super easy to execute. So just take a position tool, right click on it, create limit order, and I would have to go to like, something. There's no market open. We just click limit order, and then it's super freaking easy. It does the math for you. So you know, put like whatever. You just start with like, let's say you want to risk 500 and you're on micros. Just put like 5 macros in. That's going to tell you what your risk is going to be according to your stop loss size that you actually have on your position tool. Maybe I'll make a video when the markets are actually active. I can make a video on that, how to actually do that. But there's tons of videos on it, dude. Just look that up. It's like super easy. We're almost at an hour here, but would you recommend to watch your backtesting session to have a deeper understanding? Oh yeah, for sure. I'll watch that. Got any examples of when it's okay to trade away from failure swings? Bro, it's really gonna be. This is really like super advanced, which I really don't even want you guys to do. That's the thing, because to identify this is something I did on Monday. I don't even want to get into that right now, to be honest, because we're already at an hour, and I really don't want you guys to focus on that, because I don't want people to start trading with failure swings. No. It's very specific, which, like, again, we'll probably get over into like someday. Yeah, it's like super specific, and ideally it's around drivers, because drivers can actually confirm. There's a lot of things like internal manipulations and then like drivers, but ideally do it on indices, ideally. And there has to be a higher time from context as well. So essentially, you're going to be trading a higher time frame retracement, in a sense. But got any examples? Oh no, I already went over that. Yep. Would you look for SMT? What time do you confirm it? Wait, when you look at an SMT, so we're not. I'm looking at key levels through the 1 hour and 4 hour. So like highs and lows, let's say you want to have SMT between. That's going to be the time frames you're going to be looking to frame the high and low of the day. So it's really SMT between those highs and lows, right, on the hourly and 4 hour time frame. As far as a time frame to confirm it on, it's going to be like the fractal model. So let's say price trades into what's an example here? Let's go to this day. Right, price trades an SMT here. So how do we confirm this as a, how do we confirm it? It's just going to be hourly or 30-minute fractal models. So candle closes. So here we have a candle close. This is the GXT rate. It's a 10 a.m. reversal. The high of the 10 a.m. candle is formed from a hourly C2, right? So then you expect C3, C4 to expand within that already bearish 4-hour expansion candle. So it's literally how to confirm high and low of the day. It's from relevant levels and the fractal model within an expansion candle. That's it. Now, if the 4-hour candle doesn't support expansion, you simply wait for the 4-hour close and trade the continuation. Does that make sense? So it's a lot more simple than y'all think. Like, it's really the framework, like, that's the hardest part. But confirming it and trading the entry away from it is like super easy and like elementary. So you only look for CSD in the 30-minute and below. I don't even use. I promise. Like, I don't need a CSD to confirm the high low day, because look at this example. If you're gonna wait for an hourly CSD or something, you get missed on the trade. If I go to 30-minute, maybe there's a CSD, right? Again, you're probably missing this trade because you could simply just trade this. You could trade this candle. You could already be in the trade before the CSD, if that makes sense. So a lot of times you don't need a CSD specific to New York reversal. Now for London reversal and Asia reversal or whatever that form the high and low of day, those are just going to have a CSD naturally because more time has passed. But when you gauge at a key level in New York session, it's the most volatile time, so price moves quickly. So price can expand away quickly, which is gonna leave you behind if you wait for a CSD. If that makes sense. So it's really the continuation signature within the fractal model that confirms that reversal. Can we ever have a, yeah, what do you mean? As in you guys, as in like members, y'all can start up the voice chats, but yeah, we do backtesting sessions. I have already 2 uploaded. So they're already uploaded in WAP if you haven't seen them. So let me get this straight. Do you determine the high and low they've created for the hourly closes inside after reaching a kilo? Yeah, right. So you're gonna have a relevant level. That's the most important part. Is a relevant level to trade away from, right? And once you have that, it's super easy. You need a fractal model away from that level, right? Within an expansion candle in the 4-hour, because then, the key level is what forms the low of the day, right? So if I go to, this is from the high of day, right? On the daily time frame. Now, ideally, this wick is a lot smaller because then we would be aligning expansion candles. So the daily would support expansion, then the 4-hour would support expansion, as you see, this small wick, and the hourly candles within that 4-hour supports expansion, as you see. So you're aligning expansion candles, which when you align expansion candle, that's already a filter for high probability trading, which really makes up for the lack of confirmation in a sense of waiting for a CSD, right? We're already, trading within higher probability conditions when you're demanding multiple time frames in one direction. So yeah, that kind of just in itself kind of confirms it. Where it's like an additional confluence. So yeah, it's just swing points, and then the lower time frame confirms the high and low of swing points on the hourly and 30-minute. So just the fractal model. Just joined the session. I love what you are sharing on your channel. They're very insightful. However, you almost always refer to SMT in your analysis. Yeah, I really. Oh wait, can you please explain SMT? Yeah, so SMT, a lot of people they really overcomplicate it. Now, it's because it is confusing because a lot of times you have SMT on both sides and whatever. If you're brand new, I would probably watch T-Tread's video on it, and he's gonna show you SMTs like this, like super basic stuff, which is what a lot of people think of when they, think of SMT. But it gets a lot deeper than that, which is what obviously is a part of my trading. So when you see me talk about it, you can. I'm gonna use it. I'm gonna refer to it. So if you just want to kind of ignore that, that's fine. If you just want to focus on the model, like you don't need all this fancy stuff maybe, but you do need SMT. Like I'm not gonna lie to you. Some people are gonna tell you that you don't need SMT. I would disagree with them. SMT is one of the most powerful concepts. Literally at every single reversal there is an SMT. There's multiple forms of SMT, which I haven't really taught you guys. Maybe some of you guys already know them. There's like 2-stage SMTs as well. There's a lot of things, but I'm telling you, SMT, if you really dig deep into it, I know you're new, so more so focus on the framework, and then SMTs kind of confirm that framework. So yeah, focus on the framework first. But yeah, when you really learn this SMT stuff and whatnot, it's like probably the best. I don't know what to call it. Concept, I guess. I don't know. Confluence. It's like really good. An experience if there are, for example, 2 or 3 failure swings, is price likely to go to the deep? Oh yeah, the deepest one is what we want to actually manipulate. We never want to frame reversals like this. So say there's a bunch of failure swings. We never want to just, frame reversal this high, because what is this doing? It's just leaving behind failure swings. Right? We want to trade away from something like this. This is something that AM talks about, where we want all the failure swings to be manipulated. So there is no reason to return back this level. Now, if you just manipulate this high, there's a reason for price to return back to this level because there's failure swings above the manipulation point. Does that make sense? So this is what relevant swings are. They're spaced out highs and lows that are not failure swings. So when you actually manipulate them, right, there's no reason to return in a sense, right? And that's where we frame reversals from. That's also where we want to see continuation signatures from, because if you don't manipulate that relevant high, then there's nothing else to reverse from. It should just continue, right? Yeah, watch T-Trade's video on SMT. It's very basic, like very elementary, but that's that's really all you need. But yeah. Can you go through how to identify trash PA like yesterday? Yeah, I'll definitely tell you, because look at this. So like I said, like we're in this level here, but what do I see here within within this day here? It's more so just choppy. I can't really trust this low to trade away from, especially when the Asia session does some shit like this. Where yeah, it opens low first, which does support a bullish day. But what are we seeing here? So let me fast forward to like relevant times in the day. So like 8 o'clock. We're just consolidating, right? I just see a bunch of failure swings to both sides, which is like seek and destroy, right? So it's like if I want to long, then ideally I want all these lows to be manipulated, right? If I want to short, then I want this high to be manipulated, right? But what do we see? 930 really does nothing. Now, you could potentially say that, this could be something to trade away from, because we do open low first. We have this CSD. So this is kind of what I was playing off of. We had this SMT here with YM. So it's like if we're going to be bullish and not come after all these lows, then ideally then we just like expand right away from this little manipulation. Now I can't even short this either though. So it's like if the only reason I even consider this is because 930 traded away from this low, right? So it's the if then scenario. But I can't trade away from these highs because these are just failure swings, right? Like especially on like the 15-minute, like bunch of failure swings. So when I see 930 create this manipulation, it's like, well, okay, maybe we can go to these highs, and this could just be my trade. Like literally this low to this high, it could be my trade. But what are we within this reversal candle on the 6 a.m. candle? So I'm gonna wait for this to pass, right? And what do we see here? If this is going to be a true manipulation, then we don't want to see deep retracements, which is exactly what we get. We actually, take out this low, and we're leaving more failure swings. So at that point, it's invalidated. The whole idea is invalidated because now I don't have a driver confirming the low of day, high of day. It just does nothing, and we're just creating more failure swings. So it's just not, good PA to me, in my opinion. Like, yeah, mechanically, there is a GXT model here, right? Because we have 10 a.m. low is being created from manipulation, but it's not good in my opinion. Like it's really not that high probable. Because when I look here as well, like when we engage with this low, we trade away from it and then we create a super deep retracement again. It's like super trash PA in my opinion. So I just avoided it entirely. But yeah, it's just like not ideal. Like if we're gonna create this SMT, then I want it to hold. The fact that it broke as well. There's no SMT here either. I don't think. Like there's literally no SMT with this low on any asset. I think RTY maybe. No, I don't even think so, bro. Nope. Yeah, this is super. Like it's just not clean to me. Not at all. So when there's no SMT, and the driver doesn't trade away from it, then it's like super trash. Look at L. Yeah, I saw some people like short this. It looked like decent on RTY. It looked all right. I think Aiden took this or something like that. Maybe it was like 830 driver. Oh yeah, it was. It was this. So we saw 830 make an opposing run to these highs, and then you have like some. Not really. You have like some, previous candle high SMT, which again, not really relevant. I'm not gonna lie to you. Like this SMT, where was it? Maybe it was like this. I don't even know, dude. I saw some people mark out shit like this. This is not relevant, guys. Like that's not an SMC that actually fucking matters at all. Um, but yeah, it was just not high probable in my opinion. But yeah, we saw 8:30 and 9:30 do nothing, so that's already a red flag in itself. Like, but that's something that we're gonna go over next stream. But yeah, guys, we're at like an hour. Probably gonna end it here. If you guys, if I miss your question, just add me in the chats. I'll get to it eventually. But yeah, next week I am gonna be busy though, guys. I'm going on a trip. My little sister made regionals for track, so we're traveling for that event, which we leave Friday morning. We get back Monday at some point. So I'm gonna have to reschedule next week's stream. But I should be done with those slides, and that's gonna be pretty sick. It's gonna help you guys a lot. So yeah, y'all have a great weekend. My T-Talks comes out Sunday, so it's much like our last stream in a sense. Maybe a little bit added to it, but yeah, y'all should give that a watch as well. But yeah, where can you listen to T-Talks? T-Trade's channel on Sunday. But yeah, I'll catch y'all later. Y'all have a good weekend.